Bitcoin is trading down now for the fifth straight day. This is the longest run since six consecutive days in August was the last time we saw something like this, August of last year. So what does this all mean? Joining us now to discuss the crypto markets is OANDA Senior Market Analyst for the Americas, Ed Moya. Welcome back, Ed.
Thank you for having me.
Thank you for being back. Of course, we had a very strong jobs number on Friday, and people are waiting to hear what Fed Chair Jay Powell will have to say tomorrow. He's speaking at the Economic Club of Washington. But what does this all mean for crypto? I mean, we saw, with this strong jobs numbers, way blowing it out of the park here compared to what we were expecting on Friday. Is inflation under control? And the reason I'm asking is that do you think that the market, according to your notes, is expecting that the Fed will maybe raise rates a little bit more than it should? But are they trying to get below 2% for a consistent amount of time at some point to sort of even everything out to that target 2% rate?
Need to get to 2% first. Jeez.
Yeah. I think it's still going to be very hard to get to 2%. I'm anticipating we've had a couple softer than expected inflation reports, so that's kind of put in the mindset that these disinflation trends are firmly in place. Even the Fed acknowledged for the first time in this cycle, they said that the disinflation process has begun. But the problem is, the labor market, which is showing us wages are likely to remain supported, I think, probably for the foreseeable future. That's going to complicate how much further inflation declines. So, I mean, right now it seems that if you're looking at inflation, I think these disinflation trends are going to hit a brick wall pretty soon, and that's because the labor market's too hot, and that's really confusing traders because they don't know exactly when. Okay, well, we really see the Fed completely abandon, the threat of rate hikes, and we're still twice above their target. I mean, we're nowhere near getting the job done with inflation. Yes, there's positive movement. Yes, it's heading in the right direction, but there's still a lot more work that needs to be done. So
that work that you're talking about, could it be one or two more hikes more than the market expects? Could it be some more unloading of the balance sheet to raise rates that way, to sort of, like I said, to that 2% target? I'm wondering how wedded they are to that 2% target that would make the Fed say, you know what, let's risk a slight recession. Let's maybe surprise the market. Do you think that the Fed has any ability to do that, or they need to stay on the wrong side of the 8 ball because that's just their nature?
I think the Fed is. They did. When they were in the middle of this tightening cycle, say we're prepared to trigger some economic pain and harm here, and that this economy might need to head to a recession to really conquer inflation. And I think that's still what's going to need to happen. When you take a look at these expectations on what the Fed will do, before the employment report, there were a lot of traders that were thinking that they might be done. And now all of a sudden you're looking at the market, and now it's leaning towards maybe two more 25 basis point rate increases. These expectations, are widely swinging, and I think you're probably going to see, if we have continued strength in the labor market. And I think what happens is a lot of traders, they hear all these layoff announcements, but it's still not, I think, going to really move the needle. I think there's still tremendous strength in the labor market. The JOLTS data is very strong, and you're not going to see the service sector completely fall apart, and that's what needs to happen.
Right. Layoffs, to be sure, the layoffs are happening in one particular side. It's tech, a little bit of media, and crypto. So I do you think that the traders are getting kind of confused there, that they're seeing the layoffs happen in things that the news loves to cover because that's kind of like adjacent to what they do, and it's kind of interesting. But do you think that that's sort of confusing the traders, and they go, "Oh wow, look at all these layoffs"? No, it's just like media people's friends.
That's part of it. I mean, when you take a look at the economy, we have, as you highlighted, tech, crypto, real estate, Wall Street. They're having all the layoff announcements. Large parts of that part of the economy is in a recession, but the service sector is still very strong. And until that weakens, you're going to see continued wage pressure, which is going to make the Fed really kind of just stare at each labor market and inflation report and say, well, maybe we need to continue with this hawkish pushback. Fed Chair Powell was doing a good job over the last few rate policy meetings where he would kind of stick to that hawkish tone. There was no reason for him to go dovish, and now you saw how the market overreacted to this employment report. I still think that you're probably you should price in at least another one or two rate hikes, but the risk of more is still on the table. So I think investors need to be prepared for that, and that's why crypto and the S&P 500, the Nasdaq, everyone was short at the very beginning of the year. Everyone was anticipating retest the October lows. Would Bitcoin break, and would we see that collapse to 10,000 that so many people were eyeing? Well, it seemed that didn't happen, and then you slowly saw momentum take over. I mean, Bitcoin rallied almost 40% in January. That was pretty impressive. And now you're starting to see, is there enough momentum to take us much higher? I don't think so. I think, will we see some downward pressure on equities now that we've kind of overshot? Probably. So it means we're probably range bound for a little bit until we have much clearer clarity, which won't happen for probably a few months.
Couple of points I just want to make there. Lawrence, you mentioned the jobs. We did learn on Friday that Filecoin is laying off 21% of their staff, which is surprising given we just saw them, spent time with them in Davos at the World Economic Forum, where they had a huge presence on the promenade, the Filecoin sanctuary, tens of thousands of dollars spent on that. Sad to see more cutoffs in the crypto industry. And just on about Bitcoin, it's trading down for a fifth day straight, which is the longest run since falling over 6 straight days back in August of last year. There, as you said, Ed, there was a big rally for the month of January. We do see a bit of profit taking. Do you think that this is a bit of more sustained trend, or where do you see Bitcoin headed?
Well, I think the correlation with Bitcoin and Treasury yields, still remains intact, and you could, lump in, the S&P 500 too. And right now, yields are soaring; they're skyrocketing, and where do we go with the 10-year yield? 3 or 4%. I feel like you could, take me to the blackjack table, and they have better odds there. Betting on red or black. I think there's no certainty as far as how much higher yields are going to go, and if yields continue to rise closer to 3.75, that's going to put pressure on crypto. That's going to put pressure on everything. So you're probably looking at I think a consolidation. Obviously you're going to target the psychological levels. 20,000 should provide some major support, I think. But obviously we're still headline driven. I think overall, if these geopolitical tensions remain intense, if we start to see further signs that some inflation abroad is becoming more stickier than we thought, then there's risk for I think a decent sell-off across Wall Street, and that could drag down Bitcoin.